Hello, everyone, and welcome to part 4 of the Pass-Through and Composite webinar series presented by the State of Connecticut Department of Revenue Services. My name is Richard Carter, and today I'm joined by James Chikolsky, who is in the Pass-Through and Composite Filing Unit. Jim, it's good to see you today. How you doing?
Good to see you, Rick. Glad to be here.
Good to be seen. Thank you. So this is the 4th and final webinar in the series. So it is the last waltz, if you will, so to speak. Apologies to Lee Von Helm, wherever he might be. So today what we're going to do is do a Q&A of the most frequently asked questions we have received throughout this webinar series. And as an added bonus at the end, we are going to take questions in the chat. Can't guarantee we're going to get through every question in the time we have allotted, but we will try to get through as many as we can. What do you think of that, Jim?
It sounds great.
All right, fantastic. All right, so if we could go to that next slide there briefly for a second, we just wanted to chime in. Thank you very much. So what we wanted to let you know is that throughout this FAQ, we will regularly reference 3 different forms. And to keep the questions and answers shorter, we may reference these forms as follows. Jim, why don't you tell the folks about it?
Right. Thanks, Fred. It is important to note the 2 main returns because they are changes this year. The first is the form CTPET, which is the pass-through entity tax return. We might reference that as the PET or CTPET. The composite return, which we would refer to shorthand, it's the CT 1065, CT 1120 SI, Connecticut Composite Income Tax Return. That's important to note because in past years, the pass-through entity return had that similar form name. So that's a big change. If we refer to the composite return, we will think of the CT 1065, CT 1120 SI. And then lastly, the schedule CTK1, the member's share of certain Connecticut items. I believe everyone would be familiar with the CTK1 already.
All right, very good. And just like that, we're off. All right, so here is question number 1 for you today, Jim. What is the purpose of electing the CTPET?
Okay, the Connecticut pass-through entity tax, or CTPET, it is a business tax. It would be a business tax where tax payments made are deductible in determining federal income. The Connecticut composite income tax, and again, that is now named the CT 1065, CT 1120 SI, is an income tax. Income taxes would be reported by members on their individual returns and could be deducted as an itemized deduction. And that would be subject to the SALT or state and local tax limitations. So each entity can decide on its own whether filing the form CTPET is advantageous to their own tax planning purposes.
All right, very good. And just like that, we're off. Wheels up. Okay, question number 2 for you, Jim. What if a PE made pass-through entity tax payments, but does not expect to file a pass-through entity tax return?
Okay. Well, if an entity has made pass-through entity tax payments, but does not elect into the CTPET, the election was made. I'm going to make sure I get this correctly. I'm sorry. The total amount of those payments can be claimed on the composite return. And again, I will reference that as the CT 1065, CT 1120 SI with the new name. It could be claimed on Part 1, Schedule A, Line 5B. So yes, if an entity has pass-through entity payments, but does not elect into the CTPET, they can and will claim those payments on the composite return.
All right, very good. Thank you. Question number 3, if we can. All right, there it is. Can an overpayment of the PET be applied to the composite tax liability in any amount with any excess refunded on the PET return?
Yes, the short answer is yes on that. And it can be applied or claimed in multiple ways. The PET or composite income tax payment can be, no, I'm going to make sure that's right. The pass-through entity payment can be claimed on the pass-through entity return against the 2024 liability. It can be refunded back to the PE, and it could be applied to the PE's 2025 estimated tax. Of note, if the election or request is made to apply that overpayment as an estimated tax payment, It would be applied as the due date of the first quarter estimated tax, assuming and as so long as the tax return is filed on time, or if the return is filed under extension, should the timely request for extension having been filed. An important note here is any requests to apply the overpayment to the following income year as an estimated payment, that request is irrevocable.
All right, very informative. Thank you very much. All right, question number 4. To extend the time for filing a PET tax return, do you need to file both the composite extension and the PET extension?
The quick answer on that would be yes, that if electing into the pass-through entity tax, filing both extensions is required if you know that you will be making that election.
All right, good to know. Question number 5, if we can. There it is. Thank you. Can the election to file a pass-through entity tax return be made when we file the composite income tax return after the original due date on extension if a pass-through entity tax return extension was not filed?
Yes, yes. For 2024 returns, provided that the composite return is timely filed, they may file the pass-through entity tax return. Speaking of timely filed returns of note, you'll see on the slide in front of you, there is a screenshot of the TSSB 2025-5. That's Taxpayer Services Special Bulletin 2025-5. This was recently issued. It's available on our website under the publications, and it discusses the initiative where the time to file for an extension of the CT 1065 or CT 1120SI, that would be the composite return, or the CTPET, the pass-through entity return. It allows for the extension of time to file an extension of those returns, as well as it allows for the extension to make payment and file returns. That TSSB, again, can be referenced on our website under publications, and it discusses that initiative to allow for the April 15th extension.
All right, very good. Thank you, Jim. Question number 6. This is one of my favorites for some reason, but where is the final return checkbox on Form CTPET pass-through entity tax return?
Well, on the new the pass-through entity tax return, now referred to as the CTPET, there is no longer a checkbox on that form. All entities would be filing the Connecticut 1065/CT1120SI composite income tax return. On that return, there is a final return checkbox. If the entity files and makes that election to file a final return and checks that box on processing and filing, it will automatically close the pass-through entity account as well.
All right, very good. We're about halfway there. Just as a reminder, if you do have questions, throw them into the chat and we'll see if we can get to those. All right, here we go. Question number 7. This is an easy one for you too. What happens to prior year net operating losses?
It is a question we've come up across and fielded many times. So prior to 2024, the Connecticut income tax could be offset by net operating losses or NOLs under Chapter 228Z, the effective business entity tax. For now, periods beginning 2024, NOLs can no longer be included. NOLs are determined at the member level, depending on their other sources of Connecticut sourced income. So therefore, each individual or trust or estate, they must file their Connecticut return to report their own prior year Connecticut sourced NOL, and that would be used to offset the Connecticut sourced income. And then that trust or individual or estate would then receive any excess composite payment and or CT PE tax credit.
Very good. Circle gets the
I'm
square.
thinking PET and stuff on my brain.
That's okay, Jim. All right. All right. Let's go to question number 8. And I'm going to read this off the big board so I make sure I get it right. Can you look through the PE members and the multi-tier structure to pull out the eventual upper tier members that are not subject to the pass-through entity tax and or composite tax? What say you, Jim Jakolski?
Yes, another question we've got a lot of. And the answer is yes. Providing both of the following conditions would be met. A subsidiary PE is not required to make pass-through entity tax payment or Connecticut income tax payment on behalf of a parent PE. So there's two conditions. The parent PE would have provided sufficient evidence to the subsidiary PE that the member of the parent PE is a member on whose behalf pass-through entity tax and or Connecticut composite income tax payment is not otherwise required to be made. So this, for example, this would be a corporate member or a resident individual for composite tax purposes. And the second part would be information about the member's share of the parent PE's income would be provided to the subsidiary PE that is making the filing. I think there's a second slide that details a little further here. So this second slide has the same question on top. So I'll discuss these two forms here. And I'll make sure I read these to get the parts right. So on the form CT-PET, and again, this is the pass-through entity tax return now. A subsidiary PE may adjust the distributive share percentage reported on Part 1 Schedule B and Part 1 Schedule D to account for the parent PE's members that are not subject to the pass-through entity tax. So these Part 1 Schedule B and Part 1 Schedule D, this is the computation that drives the calculation of the sourced income. The subsidiary PE still, though, should report the full distributive share percentage on Part 4, and Part 4 is just the full member information section. Regarding the form CT-1065 or CT-1120SI, which is now the composite income tax return, the subsidiary PE may adjust the Connecticut sourced income reported on Part 1 Schedule B, Column C. This would account for the parent PE's members that are not subject to the income tax payment. And similarly to the PET, where the member information is reported, the subsidiary PE should still report the entire modified, the subsidiary PE should still report the entire modified sourced income on Part 6. So that would report out to the members. And then on Part 1 Schedule B is where we could allow for the change or reduced distribution percentage.
All right, a lot of information there and well worth it. Okay, let's get to question number 9 then, shall we? Thank you. Form CT-PET includes a line to add back the pass-through tax in determining Connecticut income. Is there a similar line for the composite return and Schedule CT-K1?
No, for the composite return, and again, I will keep referencing the proper name, the CT-1065/CT-1120SI, or the Schedule CT-K1, there is no add back modification to add back pass-through entity taxes deducted in determining the Connecticut source income. For the Connecticut PET, the CT-PET, there remains the addition amount. For the PET purposes, there is a PE credit limitation, which is incorporated, which incorporates that modification. So therefore, on the composite income tax side, there is no need for the add back modification.
All right, very good. Let's bring up question number 10, shall we? Here we go. Where do we file Schedule CT-K1? And does the CT-K1 generate automatically after filing the Connecticut composite return on myconneCT?
Okay, Rick, that's two-part question there. So the PE is not required to file the Schedule CT-K1, the member's share of certain Connecticut income items, with DRS. However, the PE must furnish them to each member who is or which is a non-corporate member, whether resident or non-resident, or if they are a PE. As far as myconneCT, if completing the return on myconneCT, the Connecticut composite return, CT-K1s are not automatically generated. On our website, on forms, there are blank CT-K1 forms that could be filled and distributed out to members in that manner. And as we speak, there are efforts underway to prepare a fillable form CT-K1 that will be available for you in the near future. At this point, it's not yet on our site, but they aren't automatically generated, but we're coming up with ways to make that easier for you to get them filled out and issued to your members.
All right, fillable form, that's a good idea. We hope that that comes to fruition very soon. Question number 11. We are coming down the home stretch here, Jim. What are the amounts on Schedule CTK1, Parts 3 and 4, and reported on the non-resident individual return and a parent PE member return?
Okay, so I think everyone can see the slide up in front of them. So coming from the CTK1, the middle column, Part 3, Line 1, this would be the tax payments made on their behalf. So for a resident individual or a resident trust or estate, they are not deemed taxable members. There should be no tax paid on their behalf. So it doesn't apply there. For non-resident individuals, if filing their CT1040 NRPY, any tax payment on their behalf would be reported as withholding on Schedule Section 3. For non-resident trusts or estates, it would be reported on the withholding schedule within the CT1041. And for the pass-through entity, it is now reported on Part 1, Schedule D, Column C. For PE tax credits that are coming on the CTK1, which would come from Part 4, Line 1, residents, individuals, trusts, or estates, and non-residents, individual trusts, or estates, they would all report that on their own respective Schedule CTPEs. For the pass-through entity, it would be reported on Part 1, Schedule D, Column D.
There you go. There's the long and the short of it. All right, very good. Let's bring up question number 12, shall we? Here we go. I'm going to read from my cue cards on this one. I have some members with income and some with losses. How do I report the income on Part 1, Schedule B?
Okay, on the CT1065/CT1120SI, only members with greater than $1,000 would be deemed taxable members. So any member with less than $1,000 of income should not be included at all on Part 1, Schedule B. And a loss would be considered less than $1,000 as well. So they would leave those members off that schedule. So again, only members with greater than $1,000 of Connecticut sourced income would be reported on Part 1, Schedule B on that composite return.
All right, very good. All right, here's the last one for you, Jim. Question number 13. Lucky 13. How about that, huh? All right, 13 questions. Here it is, the final one. I'm completing the form through my software program and the amounts aren't calculating correctly. What say you?
If that instance comes up with you and you believe that there is a calculation error or your schedules aren't populating accurately, you should please contact your software vendor directly.
All right, that was good. Quick one, in and out. All right, very good. So that completes our section of the program with the questions and answers. And I do see we have some questions coming in. Just as a quick reminder, if you do want to see any of the other previous parts of this webinar series, just go to our website, which is located at portal.ct.gov/DRS. And I believe you can go through the Taxpayer Education Center, and all 3 parts, including this one, will probably post in about a week's time. So you'll be able to review it at your leisure. You know, as I look at the screen, Jim, either you've gotten taller or I've gotten shorter over these last few years. I'm not sure what's going on with that. Geez, there's a discrepancy there.
I eat my vegetables.
Okay, that's what's doing it. All right, so here we go. Here's the first question. Let's see. If the CT-PET is due April 15th, do you have to put the CT 1065 on extension March 15th?
This was covered in one of the questions, so I would direct anyone to our website under publications to view the Taxpayer Services Special Bulletin recently issued 2025-5. With this initiative, both the filing of extension requests as well as the filing of returns and making payment are extended through April 15th of 2025.
All right, very good. Next question we have, this one comes up a lot. How do we get a copy of the slides?
See here. It says, unfortunately, a copy of the slides are not available, but as in past webinars, a recording of this webinar and as well as the prior webinars, they are available in our Taxpayer Education Center on the agency website. I'm being told it would be about a week before this webinar is posted for viewing.
Yep. And all of our webinars are out there as well. So next up, can the overpayment be applied to the composite for just an amount needed, i.e. doesn't have to be the full PET overpayment?
So the quick answer is yes on that. I think this was also touched on in a previous question in that it can be applied. It can be requested as a refund. It can be applied against the liability, or it can be requested to be applied as an estimate. And you could break that down. It doesn't have to be an all or nothing election. So yes, you could apply what is needed to satisfy the liability, and then any remaining overpayment could be requested to be put elsewhere.
All right, fantastic. Thank you, Jim. Next up, if there is an overall loss, is a composite return required?
Yes, if the PE is conducting business in Connecticut, the composite return would have to be filed regardless of income or loss.
All right. Hey, we like that one. Quick, in and out, no one gets hurt. All right. Next up, let's see. If you file the composite return for a non-resident partner, do you still need to file a CT 1040?
Well, generally, if the non-resident has no other activity in Connecticut and their only source of income is coming through from that PE and the composite payment is made on their behalf, then the non-resident would not have the requirement to file. And I am getting guidance here that there are additional details that can be found on the composite income tax landing page on our website.
All right, good to know. Here we go. Next question. I own an LLC and am the only member, and I live in Connecticut. Do I have to fill out Part 1, Schedule B?
Oh, since you are a resident individual, there is no composite tax to pay on your behalf. You're deemed a non-taxable member for the composite income tax purposes. So therefore, the Part 1 Schedule B would be left blank.
Okay, good to know. Just as a reminder, our website is portal.ct.gov/DRS, and as indicated earlier by Mr. Chikolsky, not only do we have webinars out there, but there's a plethora of other materials that you can use if you want to dig into any tax subject. All right, continuing on. I got the plug in for the website, so that's a good thing. Let's see, here we go. Can an overpayment on the composite be applied to the PET?
No, the overpayments from I'm going to keep drilling that home because of the name change. The composite return, or the CT 1065, CT 1120 SI. Overpayments from the composite return cannot be applied against the CT PET. Only the reverse. Overpayments or credit from the CT PET can be applied to the composite.
All right, good to know. One other thing about the website is actually there are materials out there specific to the PET. You will find that there's web pages. I believe we're going to have a resource slide that's going to come up soon, and that give you a general idea. There it is. Thank you. We have web pages and forms and instructions. Those can be found out. They can be found on our website again, which is located at portal.ct.gov/DRS. The web pages can be found under For Businesses. The forums can be found under Forms, obviously. And then the TSSB is in the publications section. These questions, I understand, will be emailed out with the recording, or these will be emailed out with the recording email as well. Well, that's going to about do it for us today. I believe that is all we have for questions at this point. We'd like to thank also trending. I'd be remiss if I didn't mention that on our website. When you go to the homepage, there is a area there where you can click on trending, and that should take you to some of the materials that you seek as well. On behalf of my friend and colleague, Jim Chikolsky, I am Richard Carter. I'd like to thank everyone for watching, and we'll see you at the next webinar.